All right, let's jump into things. Where we at? 10:39 on the 7th. So day after the election. Whoa, jeez, what an absolute bloodbath it was for the markets. Really, I mean, it depends what you're trading. Really, it depends what direction you were trading. Unfortunately, I got caught out with a couple of sort of metal positions. And it's one of these things in hindsight, you sort of look back and you're like, this was my plan, this is a thing. So I've got to do some sort of self-reflecting on as to sort of why I didn't enact what my plans are, because I trade these things every day and I make these recordings every day. And, from like, just particularly with gold, this is the disappointing one for myself more particularly is this last period through here where I said, look, we're going to have one wave, two waves, and I said, look, this is some stops to come out here. We want to start shorting up around this area here, and it's just been one way and even just super accelerated yesterday. There's no part of the chart that you can sort of look at on these points here. I mean, even if you look at this is what we say we want a nice clear cut line for gold, and once it breaks that clear cut line, which is this area here, that's when you expect your bloodbath. And this is the biggest. I mean, look at this candle here. This is a 4 hour. What's this? 7, 20, 27, 24 down to 63. That is a big candle. That is too early in the morning to do to do the sums. That's a $60 4 hour candle. And hindsight's 2020. That's great, but this is the whole point of doing these videos every day. That you build your plan, you build your idea, and it goes to show that sort of like when you take your eye off it, it doesn't take much because the days that you take it off are the days that sort of unfortunately you can really sort of get knocked about and that. So yeah, going to lick the wounds a little bit on this one, but that doesn't mean that we can't sort of find some more trades and do things moving forward. So look, Trump won. Everybody knows this. That was pretty much the expectation. Interesting thing that I think is a bit of a takeaway about this sort of stuff is remember the gap down Monday morning when people were like, hold on, wait, it's actually a close race. This gap here, which is a big gap. You know what I mean? Like that. I mean, technically, I thought we actually opened up around here. I think it was yesterday because I remember looking at it and sort of going, let's see if it changes on. Okay, maybe it just sort of flew off straight away. But I remember looking at it on a lower time frame, and the screen was like this. And I'm like, when's this thing going to open? Because it was just a little blip here. Yeah, like this. There we go, on the lower time frame, because I have it on two time frames to get the full sort of picture. I remember looking at something like, what's happening? Why isn't it opening? Why isn't it opening? And of course, it was because it was up here. And then up through here through the day. So it was really just a one-way show yesterday. And the point that I'm trying to sort of make with this is that sort of like, you hear these sort of, you got to sort of take what you hear with the news with a grain of salt because, you know, this whole period here was sort of justified because it was like, oh, it's actually going to be quite close. It wasn't close. It wasn't close the whole day. I think the first sort of like count was like 3 to 25, and really he just steamed ahead the whole day. So it was never close. But of course, this sort of got the market believing that it could, as I reported as well. I said structurally this would be the area that you'd want to come back to. Like we had our first price target here, NFP, stupid bounce up here, corrected, came down here, structurally hit this lower level down here. Well, I've already got it marked out. And that would be an area, the price target too. I did not expect this. As you can see, yesterday I was like, oh, look, we might get a bounce and then continuation down here. If we break above this, this might be a level here. Look at this. I was way off. And that's the thing exactly. I mean, look, you can read it right, but this is the first election that I've traded through. So this is certainly something that is somewhat new to me as well. Just the extent that the market could move with these sort of things. Like this kind of move through here. I mean, realistically, even if you just take it from where close was, which was down here, and then you drag it up there. I mean, that's a near 2% move. I'll probably make it just correct. Yeah, still near 2% move. That's a $2 move for DXY. That is massive. You don't get that. I mean, look, you got to sort of really search back to see where you might see a move like this, like coming down here. But you know what I mean? These things don't come very often, and this really just absolutely smashed out the last couple of positions in a few bits and pieces and that. So yeah, so very much look, dollar back in control once again here. Um, the idea, I guess, as far as I sort of see with this, is mainly predicated around the idea that, you know, and I mean, Trump's very hard on tariffs. He sort of touts them a lot as his sort of like you know, main part of his playbook and that. With that, then you know, if you sort of extrapolate it out, that you know, if it's going to cost more to get in, it's going to cost more to sell. If it costs more to sell, well, that's prices up. Prices up is inflationary. Inflationary, Fed need to do something. Less likely to cut, um, or at least cut so extreme to sort of like catch the to sort of you know make sure that inflation doesn't run out of control. So this is, as far as I could kind of see, the main driver behind this kind of move over here. And you know what I mean? If and this is also the flip side of sort of why gold potentially sort of copped a bit of a whack off this sort of stuff as well. Um, my feeling with this is at the moment that potentially, look, I don't want to sort of be like, oh well, hold on, it's blown up here, and I've got, you know, I was looking in the other direction. I wasn't necessarily looking in the other direction. It was a pretty sort of self evident sort of trade sort of coming into this, and it sort of I covered it a bunch of times. I just didn't expect the power. That's what I got wrong. Um, but the thing is, it's sort of like none of this stuff is actually enacted yet. This is my point. That it's sort of like, and look, you know, we could be trading up at 106, and I could be completely wrong with this. So this is me just sort of, you know, potentially sort of playing out in my head what could be happening, but nothing has actually happened yet. As in, yeah, okay, yes, he's been voted in. That's fine. We know that. Um, we know that he's hard on tariffs. We know that there's sort of like it's been pretty much where it's got a red sweep, which, you know, I'm not really down with American politics, but the idea basically is that sort of like because he got so many people in the House or the electorate or whatever, um, that if he does want to enact things, it's going to be a lot easier because obviously these things go to a vote. They've got more Republicans than they've got Democrats in the area of the people that sort of make these decisions when they vote on it. So it'll be easier for him to get things through. So you know what I mean. That was the idea. That was the other sort of consideration as well. That if it was a bit more of a split thing, then it's all very well that he's in charge, he's the top dog, but of course, you know, if he wants to put something into effect into law, they vote on it and they could just block him continuously. So I think that's another reason why you saw a double kick with this kind of move coming up here. Um, so you know what I mean. Obviously, look, it's something to consider, but as of right now, nothing's actually changed. Like, you know what I mean? Like, yes, it's speculation that in time it will, but the tariffs haven't come in now. Inflation hasn't gone up. Like, all these sort of things that could happen haven't actually happened. So it makes me sort of think that there must be a roof to this move. It can't just sort of be like, well, you know what I mean? When you get the rates going up, that's when what I call the landscape changes. And you need to trade within that new landscape because you're in the new actual conditions. This is like any bit of data that sort of comes out. You need to sort of plug it in and sort of say, look, this is a piece of the puzzle as to what I think the central bank is going to do. And it's sort of like it's the you know, some bits of data hold more weight than others, of course, like NFP, CPI. This is what I call second tier data after, you know, FOMC. And then below that, you've got, you know, GDP and retail sales and all these kind of bits and pieces. So a lot of this move here is speculatory in the sense that sort of like, yes, this is what he said he's going to do. And people sort of just go, well, if that's it, bang, okay, let's position for that straight off the bat. But it doesn't mean that this can't sort of, you know, take a little bit of cooling off and then maybe this can be the area in which it bounces around, which obviously gives short-term downside to it before then potentially sort of coming back up and then testing the highs over here. It doesn't mean, what I'm getting at with this, it doesn't mean that necessarily we're just going to go bang and bang and bang and bang and sort of continue sort of hammering up to the top side here. It kind of sort of makes me feel that you may see a little bit of this move cool off and rebalance. And remember, we've got CPI, no, CPI, FOMC tomorrow morning, 6 a.m. Melbourne time, where they are expected to cut. So again, that's not dollar bullish. So it just sort of makes you think that you're not going to see necessarily those moves completely undo, but it does sort of give me some sort of pause to sort of think that look, this isn't the time that you necessarily chase the dollar move at this point. I think there's potentials for these things to come back and then sort of start to sort of gear up a little bit more. Maybe a retest of these highs here. We did get a bit of a break and retest here, but we'll have to sort of see how it sort of breaks out through this session. So if we just drag one of these down here, this is a little area that I'd like to sort of see taken out to the downside, and then if we go up, that's the sort of top area here. We obviously have a little bit of a bounce, sort of midway point through here. And that to me is pretty much the kind of levels that I was looking at through this session at least. I think if we sort of go underneath 104.90, well 89 whatever in change, I think that's where you start to see a bounce, a sort of range around the top over here. If we open up and it turns out it starts up here, well that could be it, and we could be sort of looking for just, yes, as I said, another potential leg up to the top side here. We did get that little through kick up here. Don't like that line. All right. Where it did stop, if we sort of have a look back, going all the way through here, is an area that we've obviously had marked out previously as a bit of a sort of swing point. If we jump on to maybe a higher time frame, I'll be able to see it a bit better. We can see that this has been an area where, they've obviously tried to sell it down. They've held it as support. And it was a bit of a sort of like a pivot line kind of thing, depending on how you want to sort of name these things. But certainly it has come right back. We're back past the 78% retracement of this large move down here, which has just been an incredible rip from where we were just a couple of weeks ago, or a month or so ago. So yeah, I think look, best thing to do at this sort of point is just sort of see how the sort of session opens up, see what they want to do with it. If they want to take it higher, well, we're probably sort of coming back up. We've got a couple of levels marked out where we could be seeing it. 106.20 kind of being probably the top. That was the top of this sort of move. Whoop, let's put it just there. 106.20 was the top of that move coming down there. Above that, 106.46, which is again is just crazy from how high we were. But as you can see on this sort of 4 hour here, that lower wick is kind of pretty much where you're going to see a confirmation of a little bit of a cooling. Doesn't mean it's coming back down over here. It just means that we may see a little bit of a stall around these levels till we sort of see what happens with FOMC tomorrow morning. All right, and gold, as I said, oof, geez, it was a whitewash down here. So look, and as I said, I'm a little bit sore on sore on this one myself, but we can see that as it sort of came down through here, it actually came down the first time, hit 2,700, big round number. I think this was almost the measured move of this little flag down here, but kind of stuffed around a little bit, obviously, before it came down. 2,700 bounced, quite a strong bounce as well, because the bounce came back up to like sort of 32 or something like this, up around here. And then obviously, as it took out the second time, absolutely smacked down there. So see if it sort of holds around this lower level here. If we sort of have a look back, we can see this is back at that top of that sort of range, sort of breakout level that we saw previously. Does seem to be holding it for the time being. Again, these big massive moves sometimes do like to sort of like bounce back up a little bit. As to how far or where it comes to, well, we're going to have to wait and see with that. Let's just have a little look. If we sort of say that this is our little drop down here, these are kind of potentially some levels. As we saw with this little drop down here, we hit the 50% and then came back down with it all. 50%, if we do this, it comes up and retests the bottom side, so 2,700. This is going to take a lot of work to get back on top of. I think this is the thing. It's sort of like, it's been up so high for so long. My price target was here. I told you we had this other price target up the top over here, but I think this is why I sort of got sucked into it all. This wasn't my analysis. I mean, this sounds like, whatever. I'm not sort of saying, hey, it wasn't my analysis, so it doesn't count. I'm not sort of vindicating myself in that, but I think this is kind of thing. My price target was this flag through here. And this is the danger of sort of sometimes sort of listening too much to other people. That they had this higher price target up over here, 2,800, and I felt sometimes, well, maybe these people know more than I do or something, and this was a sort of plausible thing. And of course, at one point we were coming up over here. I mean, I'm a short in and out trader. I'm not a buy and hold sort of person, but I do remember sort of thinking around this point, oh, you know what? May as well hold this for that last kick. Want to be part of it. Yeah, and hindsight 2020, that's obviously not the way to do things, and obviously not the way to do it when to sort of change the pattern and change the style. You know what I mean? I'm not a buy and hold trader. I'm an in and out sniper sort of thing. So anyway, that's that. So look, we broke this support down here. These are going to be your sort of upside targets or potential sort of areas to short from. So structurally, what we're kind of looking at the moment is we've got our move down, we've got our support. We're looking for this move up through here. As I said, if it comes to the 50%, that's also the bottom of that wick. It's the round number, 2,700. This, to me, looks like a decent area to then get short to target this area down here. I think sort of like, you may see a little bit of a reprieve up through this area here. And then, as I said, structurally, you want to go down, find support, up, find resistance, and then this. And this is the all-important leg, which I always sort of talk about. This is the one that's going to give you a higher low, it's going to give you a lower low, or it's going to give you a double bottom. But this leg always comes. So it means that sort of like while you're sort of seeing it move up through here, you keep in the back of your mind that this leg has to happen. Very rarely do you ever get something like that. Almost never. Like very, very sort of odd occasion. But particularly after it's broken these major levels, you got to think the market and the sort of the mentality of the traders have shifted because they're sort of like people have been caught out in these positions and they're like, oh crap, okay, you know what? If I can get here and I can get out. So that's going to add to the sell, 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 sell thing. So this is why I say it's going to have a lot of work to do. We're talking sort of 90, $100 move to regain some confidence. It's going to need to come back up here and hit 48, retest, hold at 27.18, and then move up here. These are extreme sort of ideas. They're not sort of like the thing that I think is going to happen necessarily, but I'm saying that is the conditions that you need to see for the market's mentality to then shift and say, hey, look, you know what? We want to start actually buy and hold these things again. At the moment, it's kind of like everybody's in damage control. Anybody that's still long is in damage control because they're sort of like, okay, well, I got this one wrong. Let's mitigate the losses. Here's a chance for me to get out. Okay, bang, I'll take that. Maybe people bought the wick down here on the second time and it's just gone bang and they're like, okay, well, I'm not going to just dump out straight away. I'll get out for zero, I'll regroup, and then we'll go from there. So just to keep in the back of the mind of that, as we move up through here, this leg will be coming. This bounce may not come to here. It could come to 38. It could just come to 23. And this is the point of the fib retracement. As to how high this is, this move through here, we can determine how strong this continuation move is going to be. If we get a move and it can't get past the 23 and then we get this move back here, the likelihood of this going through increases. As it goes to 38, it's still quite strong, but maybe not as strong. As it goes to 50, well, then it's a bit of a mixed bag. Could come down for a double bottom. Go for 61. It could come higher, low, double bottom. Could still see continuation. You know what I mean? Like, this is the point of the fib retracement, is to sort of determine how strong is the sort of counter trade to the immediate wave that's sort of coming down here. So where I'll probably be looking to sort of, if I can get short on this, would be around the 2,700 mark. I think that is a pretty good level. It's a big round number. It gives it quite a reprieve from here. $40 move. I mean, a $40 move is big. Like, you don't get these kind of moves. Like, this is another thing as well. We could just find that this just sort of really consolidates down here like this. And again, as I said a second ago, the longer that it just sort of sits down here, well, that means that there's no buying pressure to get it past, say, the 23%. That's very much the idea that we're going to see a continuation and come down a little bit lower, down to, back over these kind of levels, whatever, sort of like draw these things out to sort of see where we might sort of be seeing. But certainly for the time being, we're probably sort of very much more in a sort of sell any kind of rip kind of mode. All right, and put across Aussie got slammed. Uh, as ever, like I think I was doing the video yesterday. Yeah, like yep, it's selling down. It's selling down. Yep, okay, sure. And tried to take some buys at this level. I was wrong. Absolutely crushed. 130 points, I think it was, from top to bottom. Something like this. It was massive. Yeah, 134. Wow. In 2 4-hour candles. That is huge. Um, so it obviously sort of found a little bit of a support and bounced actually quite strong because if you think it came down 65.11 back up to into those 90s, which I always say the 90s are an important level to look at. And then sort of 60s are the other sort of level that I tend to look at with Aussie as well. That in the 20s, but it's not relevant at this point. So this level here. Um, so obviously, look, it got smashed down like everything did. Equity markets pumped up. Equity markets went through the roof. That was the saving grace of Aussie, probably in my opinion, because if you look at the other sort of USD crosses, if you look at say Euro, this really did not bounce the same. It's not the same chart. If you look at the pound came back down here, sort of like chasing more previous lows. Like, Aussie, where are we back onto Aussie? Aussie seemed to sort of recover a little bit more. And look, these levels that we had marked out, it did manage to close above. This is on the 4 hour here, but let's see if the daily's the same on this one. Actually, I put it on this other Aussie chart. It's a bit cleaner. Where are we at here? This one. So this is the level that I wanted to see the daily close above, 58, so more or less 60, which it managed to do. So look, this is still an important level here, in my opinion. This level here. I think sort of like if it's going to sort of hold itself, it needs to still maintain above this level here. The fact that it obviously sold down here, the fact that we could still see another sort of push up in US dollar, the fact that metals are getting smashed, copper got absolutely annihilated. All those things show the fact that this could just be a little flare up, and then we could be getting ready for another wave down. Um, but we have got the little wedge that we had, broke out, back test. It's held above this daily support area. So this is the area that I'm interested in. If this can sort of maintain above here, and we can see a little bit of a push up here, well, the next level that we're really looking at are obviously yesterday's highs, where we sort of came into, which is just over here. To me, they're the two important levels, 66.40 or 65.60. A daily close out of one of these will give you direction. Now, it sort of obviously sort of looks obviously been sell, 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 bang, came up here. I don't normally do much with the 200 MA, but I have put it on here because I've been sort of trying to pay attention to it a little bit more. Obviously, it chops around it a lot here. We did find a little bit of a bounce coming into it previously, and right on the level as the resistance as we moved up into it. So I don't follow the MA so closely, so I'll sort of just for my own sake, really just sort of keep a bit more of an eye on it. And if we see it sort of reacting a bit more on it, I'll reference it a bit more. Just have to sort of, that's the thing with these things, you just need to sort of see how they play out. All right, so with Aussie, as I said, these are your two levels that I'm sort of concerned about. We did see 23%. The fibs are more what I work with. Came up here, 23%, bang, smacked on the nose. So it's a bit hard to sort of say at the moment. As I said, look, there is reason to sort of think that you might see a little bit of a pullback, a little bit of a cooling on US dollar. If you get that, then, you could be looking for more a range through this period here. If we see another leg on DXY, well, this is just a little liquidity grab and bang, we're going down lower. And then we start to look at these other levels that we've seen more previously. So 78%, retracement of this massive move up here. This has just been a complete one. I mean, look at how nice this trade was here, and then just smashed, retests the underside of the of that pivot point there, and bang on its nose here. So look, I think sort of downside may be sort of somewhat limited. Yeah, it could be coming back in 2 weeks and we'll be trading at 63. Um, but I think sort of a close outside this box is what I'm looking for direction. So to see what happens. The fact that it didn't close underneath this daily support and managed to rally and hold above that makes me think that there could be a little bit of a chance of at least sort of milling around this area a little bit more. So I'm not looking to sort of short this till we sort of get a close down underneath here. And then look, particularly underneath 13, you're coming into some support down this area here. So probably just try and sort of sit on my hands a little bit for today, particularly after yesterday, a little bit shell shocked with being caught offside with that. All right, copper. Copper is a beautiful example of why you don't chase things. I've been covering this obviously every day, but particularly the last week or so, last couple of weeks, this through period through here. This is very nice. We've got a break, beautiful break, back test, ran up, hit the sell area exactly where we sort of said it should. I did this at the time. Excuse me. So we know that this is an area where the sellers were lurking. We could see they'd been buyers, we'd seen they'd been sellers. Sellers hadn't revisited in a long time. As I cover every single time, you don't break through the first time you come back to it, particularly after such a long time. Shorter times, you got a higher chance, but not this time. Bang! It got absolutely pulverized yesterday, and as it broke out and came through here, I was like, oh damn it, I missed it. I've nicknamed it the heartbreaker because I was in and out, and then it broke. But this is the whole sort of point. You know what I mean? And particularly and this re-emphasizes my style of trading. If I buy here, I'll sell here, and then I'll buy here, whatever, buy here, sell here, sell, blah, 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 all this kind of thing. There are people that would be like, okay, I've been sitting patiently, waiting. I've got my stops down here. I've done really well. Here's the breakout. Boom, we've gone. Bang. And it's just taken out. So, you know what I mean? It goes to sort of show that sort of like, as this thing ran up here, I'm like, look, I'm just going to let it go. You know what I mean? You win some, you lose some, but I protected myself from this massive move down here. And I think copper actually copped it worse than anything. I think about 5%. Yeah, look, that was nearly the better part of 6% from top to bottom, which is just, massive. So, yeah, look, again, it's another thing that's just kind of been put a little bit on hold for me for the time being. Potentially see a retest of these areas through here, but this is where I'm paying attention to. See what the market does, because obviously this held so many times through here. It broke out here, so I don't know if this will be as relevant, but this point just here is what I'm looking at. Because if we come up here and if we reject from here, then this leg is obviously the one you're looking for. This could be leading to something like this. If this can sort of do what it needs to do to get back above this, that's potential that you have sweep the shorts, sweep the longs, and then we go on like this. But I think this is the area you need to pay attention to with copper at 435 because it was support for so long, and obviously it just cut right through it yesterday. If that can sort of regain the buyers' composure, if they can sort of get on top of it and they can be buyers again, you could sort of see this recover and move on a little bit more. But I think at the moment, you can't make any calls till you see what happens through this move here. But again, it goes to show that I do believe that we are going to see a little bit of rebalancing from yesterday's moves. It doesn't mean that we're recovering and we're going all the way back up over here, or at least not in one go, even if we are going to do it. But it does mean that we potentially, structurally, could see a little bit of a move back to here before we see this leg. And remember, this leg has to come. So even if it is going to recover, it's going to come down like this, come down for a double bottom, or come down here. This is the move down. We found support, find resistance. We need to test this leg down here. Only once we get a higher high, and then potentially that move comes, do we sort of say, okay, that's the conditions to sort of say that, okay, copper's actually maybe a little bit better. And, you might see Aussie recover a little bit more with that kind of sort of setup as well. But certainly for the time being, it's a bit of a hold, wait and see kind of attitude towards things. China got absolute rip up yesterday. So again, this was the area that I was sort of, where were we looking at yesterday? This is the area here. I'm like, oh look, it's coming up, retested here, coming back down. And this is my point with these sort of things. This is a good example where you've got, you break down, you find support, come up, you find resistance. Resistance comes at previous areas of support. This is why we've got it marked out here. Then this leg comes down here. This leg is the one that will always come, as I keep saying. It's either going to come down for a double bottom, continuation, or higher. This was the one. It actually technically came in a little bit higher. And look, this move here was obviously more, I guess you might call it news driven. It wasn't sort of just a technical kind of move, but higher low, and then bang, absolutely ripped out to the top side. So China is back up 720, which is an area that we've obviously sort of been looking at previously as an area of support. We've got it marked out through here. It has sort of just come into this sort of area as a bit of resistance. It is sort of still closing quite strong around the top. So again, you can't sort of say that, okay, this is just going to go and come back down over here. The fact that it sort of broke through these other levels and it's kind of almost used them as a platform. So it thought about it first, then broke through, came back test, boom. These are the levels. Till you get down underneath 7, 16, 8, this is the area and this is the direction, which is going to put pressure on Aussie. If you see this come back down over here, you'll see copper reprieve a little bit and you'll see Aussie reprieve a little bit. But the thing is with China, obviously they're the ones that are in the sights, in the targets of Trump and all the tariff talk and all this kind of stuff. So, that's why the one got absolutely smashed yesterday. And if the one gets smashed, they got less money to spend, less money to spend on Aussie, less money to sort of like, probably the demand goes down a little bit. This is why copper took a hit. This is why Aussie took a hit. So see how they all flow together. And this is why, even though I don't typically sort of trade the one, it's very important to have the chart up there, particularly if you're trading Aussie and trading copper, because they all kind of feed into each other. So yeah, I think again, sort of till you get back down below these wicks over here, 7, 16, 9, whatever, this kind of zone down here, you've got to accept that this is probably going to be maybe just a little bit of a sort of a consolidation before potential to another move to the top side, which if we look at this and say that's the move there, that gives you a measured move. Moving back up 7C, testing highs. So yeah, there's certainly some potential upside for the one here, more pressure on copper and more pressure on Aussie. So we'll have to see how this sort of stuff plays out. I think if you go above 721, that means that we're going back up. It doesn't mean we're going here straight away. This is just a measured move. But the next level of interest will probably be 725. So that's one to watch. So let's put a little alert here. Seven two five. All right. Beautiful. Okay, and actually we didn't cover silver. Silver, another one that got absolutely slammed. So look, I think the indicators were there with the fact that we broke through this rising support. It held it, it broke it, it danced around with it a number of times. We did see quite strong buying pressure as I covered sort of through this area here, which I thought could have held it up a little bit. But look, it hasn't done anything. As of now, you have got a much larger, from these lows down here to these lows down here, a bit of a bigger sort of negative divergence through there. Again, this is what makes me think we might see a little bit of reprieve. Is it enough to sort of get it and go back up over here? I would say probably not at this stage. I think you've got certainly some work to do. We can update a few of these resistance lines now. If we drag this one down, that seems to have sort of worked out pretty well for a support through this area. Um, Look, I think sort of certainly here it's pretty sort of clear cut. You got your sort of little range here, broke down, retest, took out that low, got slammed down again. So I think till you're back above sort of seven is it? Is either dyslexia or just I'm not thinking. Till you're back above say 32, 30, back up and you can prove that their sellers aren't here. Because obviously this is the thing, and this is the point that I mean. When you've got buyers here, you've got buyers here, you've got buyers here, there are going to be buyers here. So the point is, if you're a buyer and you're buying this support here, it doesn't mean because okay, it breaks straight away, you put your stop here. I mean, it can, of course, but the idea, in my opinion, is that you break here, comes down, people go, oh damn it, I was trying to buy for the idea that we're going to shoot back up like this, which a lot of people did. Excuse me. Price moves back up to this level here. The people that bought that break are now the sellers. And they're the ones that go, oh, look, you know what? I bought the support because I thought, look, we were going to move back up 3,500, that kind of thing. We haven't. That means that I don't want to be part of the trade anymore. Moves back up here. They go, look, I'm happy to get out for even, take my money off the table and regroup. And then bang, that's your second wave that comes selling down like this. So it doesn't mean that, you know what I mean, we're necessarily going down to 28 here, but it does mean, like with gold, the mentality has shifted a bit. And you've got to start to sort of think, okay, when you get these rallies up here, are we going to see another wave of people go, oh, great, here's my sort of chance to sell? Are we going to see people move like this to this resistance and then sell down like this? So if we can make a channel or something out of this. The negative divergence through this area means that there is a chance that we could potentially see a move up like this, which is what I've just said. But you've got to understand that now you've got sellers here, you've got sellers here, now you've got these sellers as well. This will come in just a little bit lower than potential. I mean, obviously, depending on the speed that it comes back up here. But you've got people that are still trying to get out from this level here that maybe sort of thought that this was a fake out and then they didn't do it that, whatever. This is an area that you need to beat. You need to get above this area. You need to see that the sellers that were here, the sellers that were here, the sellers that are here that are pushing this thing down along this line, you want to see a depletion of those sellers. You want to see the fact that this little swing pivot point is no longer resistance, can be reenacted as a support. So what you want to see is a break above here, and then retest. You want to see it like these guys were trying to buy it. You want to see them give it another buy, and that's how you'll get back up here. But I think, as I said, I think there's a lot of work to be done. But doesn't mean there can't be a little bit of a reprieve through here. But if you are looking to trade it, in my opinion, I think this is more sort of sell into the rips. And around this sort of like 31.90 level, I'd probably be looking to sort of take some shorts. All right, so I think that is that. Let's have a look if we've got any sort of news comes through today. So Bullock speaking this morning. Aussies up on the morning. Nothing too exciting. Look, we got a bit of Aussie data coming out, looking a little bit weaker here. This is out in 12 minutes. These kind of things, again, stronger data is going to be better for the Aussie. Moving forward, we've got trade balance. We've got a bit of China data, tentative, so it could be just dropping at any stage. Something to sort of look for, because again, these kind of things could see a little bit of a justification for a rebalance of yesterday's moves, or of course a continuation as well. Moving through, we got the BOE tonight. Here we go. So yeah, 25 base point cut expectation. BOE doesn't tend to affect DXY as much as say ECB or anything or BOJ. So it's something to keep an eye on, but it won't be a massive market mover in my opinion. Big one is tomorrow morning, 6 a.m. We've got FOMC. 25 base point is the cut expectation. Maybe we see a little bit of cooling with the US dollar of that move yesterday just based on that. The fact that it's pretty much sort of like a widely expected cut I think sort of gives more of a shock if they decided for some reason to hold. If they decide to hold, US dollar is going to rip. If they come in 25 base point cut, well, I think it'll be mainly flat. We look for the press conference. We look for what Powell has to say. And if they did, you got to consider all options, did a massive 50 base point cut again, that would see a lot of yesterday's move sort of shoot back down. So they're the kind of outcomes. But I would say most likely you're looking at a 25 base point cut, not much of a move. Press conference, as usual, will be the one that sort of flicks it around a little bit. All right, but I think generally the idea is to sell into the rips at the moment. All right, that's it from me.